Welcome back. You're watching us here on Chartbusters. Let's talk about Carysil, the erstwhile Carysil, which has seen a bit of a rally in 2023 itself. The first half of this year, the stocks rallied about 30-odd%. But remember this after a bit of a correction that came in the second half of last year in particular. They've got some business prospects going ahead. They've given a target of 15 to 20% revenue growth in FY24, looking to go back to their margins of 20% as well. So to talk about how the Capex is going by, how demand is, we have with us Chirag Parekh, who joins us after a long time. He's Chairman and Managing Director. Chirag, always a pleasure speaking with you. In the conference call, you have guided for around 15 to 20% revenue growth in FY24 with margins coming in at 20%. And you also have a target of 1,000 crores by FY26. The implied CAGR is closer to 18 to 20%. Do you think that's the glide path that we should be looking at over the next 3 to 4 years? And the margins, is there any further upside beyond this 20% mark going forward?
Thank you. Thank you for having me on the show. So I think, just like I said last time, I think we are gaining momentum now. The business is coming back on track. I think we are very confident with the growth of what we had stated last time, 15-20%. If we are being able to do a growth of 15-20% on the top line, I think we are quite confident that there will be a margin expansion of around 20%. Coming back to your second question, is there any upside more than 20? I think let's be conservative here. At least let's do 20 now, and I think we'll see what happens. The run rate of 1,000 crores, the way we feel the things are going at this point of time, I think there are two major things that happen. Number one is the destocking is on the phase of getting over. Second is the EU plus strategy, what I spoke to you last time, that's coming into play now. So that piece has played out very, very well for us. And meanwhile, where we have dramatically expanding our domestic dealer expansion, product expansion, now all that is coming into play. With all this coming into play, including new customers which have come on board, a few quite large-size customers going to join the band too. So with all this looking, I think we are quite positive that we should be aiming 1,000 crore probably next year. It could have been 2 years after this, but I think we are honestly internal target is that we should be, and that we're trying to hit the 1,000 crore end of the year 2024-25.
All right. So by 2025, you'll be a 1,000 crore company. Or I think the street was baking in 2026, but it seems the sense that you're giving us is demand is improving on ground, right?
Yes.
All right. So a quick question then on the domestic front. How is demand out here? And last year, I think you did domestic sales of close to around 130, 140 crores. So how do you see that number scaling up in this year, the next year as well, as you hit that 1,000 crore mark? Domestic demand, is it looking up? What kind of a growth will it grow at? And also exports, US and Europe market as well. The worst is behind since destocking is behind.
Right. So Nigel, coming to your first question, I think on the India side, I think one, and I would like to say it again. I think India was never as a market, but what happened is that at the COVID time, we had so much of a backlog for India that we could not supply our products to India. I think our next 5 years, I had also stated earlier, India should be our biggest game what we're going to play in the next 5 years. Why? Organically, the exports may start growing what it is growing at this point of time. We have done, like I said, we are probably increasing our dealer network across India by approximately 50% that year. If we improve just on a pro basis, we are being able to improve the network. I think we are looking at quite a good growth around 30-40% for the domestic business. I think that's one. Yes, on the export side, yes, the destocking is, I think, not gradual, but I think almost it's over. There are probably few market which still probably has some stock. But I think the overall, it is looking very good. While I see the UK, US, the economic going on one side, and we see our products, the growth trajectory going on the other side. So I don't know why, but I think when I had spent a lot of time in the US, UK, and they say we call it recessionary-proof product, the sink and the product, because when things are not going well, you don't change the whole kitchens, but you sell the sink and the worktop. So overall, yes, I think it's looking good. Even the UK business, the surfaces business is also improving. Overall, the growth,
Right.
The market share of UK, US, and Europe, I think, should be around 50%.
All right, 50% coming in from US and Europe. You spoke about people looking at renovating their sinks and kitchen tops during weak times. In the home and personal care space, this is usually known as lipstick effect, where people buy more lipstick to look better during times of economic recession than buying new clothes, etc. itself. You spoke about the US business looking good. You've added a bunch of new clients as well. Just wanted to understand that, because Karen was the one that renegotiated that deal with you, renewed the deal at a much higher per year revenue. But you were also in talks with 3-4 more clients, and nothing was formalized when you addressed investors last time. Can you now tell us, have things been formalized? Can you reveal those names to us? And should we also take on board that FY25 you will hit that 1,000 crore mark, end of FY25?
Yeah, so yes, yes, we have roped in a lot of new customers. The large deals are falling into place. Unfortunately, I would not be able to give this name, because I think what happens is that a lot of time the competition, keeps a track on what we do. But but I think on a quarter-on-quarter numbers on the calls and when we do interviews, I will be able to tell you what is going on. But yes, I think the EU Plus strategy is coming into play now.
You want to give us a sneak peek into the size of the clients at least that you're talking to? Don't give us the names if you don't have to. But what size?
Substantial size, Nigel, that's all I can say right now. Substantial size would be anything, I think, more than, $5-10 billion revenue on an annual basis. Yeah.
Okay. All right. If demand is looking so good, I think you had postponed one of your expansions, the quartz expansion, 200,000 odd units. Is that back on?
I just had a morning meeting with my team, and I'm going to restart that plans. We had also had shut down, because we had the last quarters, we had some soft quarters. We had actually shut down our plans to just try to save our cost and all. We are rapidly now gearing up to start the plans now. We had a SAP also, which is now we are a SAP company. So last 2 months been quite, but anyway, we've been now coping up. We need to rapidly expand our capacity. I think we'll have more light band of quarter 2. What's going on at this point of time? I think we are on the verge to restart our plans.
So you're tilting towards restart of that 200,000 quartz expansion that you had put on hold. We
had about 800 we had shut down the 150,000 sinks. So we are working at a 60% capacity. So first we are starting the first 20%, which is going to take us to about 750,000 sinks, 800,000. And then by end of quarter 2 or in few months, we'll come to know once we are closed or we sign the deals.
Right.
That, then we know by quarter 2, we're going to start the balance 200,000.
We'll pose this question to you once again by the end of quarter 2. By then, you'll have a lot more visibility. Just wanted to understand, of all the data that we have so far, your steel sinks expansion could yield peak revenue of around 80 to 90 odd crores. Appliance factory could yield revenue of around 100 to 120 odd crores. You have a faucet plant coming in as well sometime this year. Safe to assume that FY25 will be the year where all these plants will be running at peak capacity? And what would the peak revenue of these additional capacities be for you?
So I think every revenue of each plant, we are targeting about 100 crores at the optimization level. But I think by year 2024, 25, we should be at least at a 50%, especially the new products, the faucet and the built-in appliances. But stainless steel, there's a big traction on it. Again, the U plus strategy is coming in. China and the U plus strategy is coming into play. We have also roped in a lot of new customers for India and for the export market. There's some few large bulk deals coming into play also in the stainless steel sink. So we are also looking at a good, we're looking at a good upside on the stainless steel sink side too.
Okay, and finally, just before we let you go, from an aspirational basis, you've always been a quartz zinc company, now diversifying. Appliances is around 11% of your revenue. By FY26, what does your revenue mix look like if you're targeting 1,000 crores? How much comes in from quartz, steel sink, solid surface, and appliances?
So, for me, Nigel, honestly, I think the percentage does not matter, but what our idea is to have a one-stop solution for a customer when they enter, when they go to buy a kitchen product. Okay. So while these sinks would still be a dominant part of the business, but the built-in appliances category is going to grow very strong. So sinks plus faucets and built-in appliances would easily take about 25% plus of market share moving forward.
Okay. All right. Chirag, thanks so much for stopping by. You want to serve the customers for the time being. Your shareholders as well will be happy. 15 to 20% growth for this year with margins of around 20%. And now you're looking to hit that 1,000 crore revenue mark by 2025 itself. It's been good speaking to you, Chirag. The sense that we got was that demand is reviving and you are seeing things reviving both domestically as well as on the global front. Stock at the high point of the day as we speak. Slip into a short break, come back. We'll continue our focus on a whole host of stocks as well as the market. Stay with us.